Policymakers at the U.S. Federal Reserve complete their June meeting at about 2 p.m. Eastern Daylight Time. That's in the wee hours of the morning here in Singapore, 2 a.m. The decision of the meeting is certainly, the market has almost 100% expectations that they're going to leave interest rates unchanged. Currently, the market is fairly certain that there'll be one rate cut coming down the pike in September and a good chance of a second rate cut after that this year. So market participants will be reading the Fed statement and listening to Jay Powell at his press conference afterward for clues on whether those expectations are correct or whether the Fed will delay cutting rates further or whether they might speed up their rate cutting program. At Powell's press conference, he's almost certainly going to be asked whether the current events in the Middle East are going to potentially have an impact on Fed monetary policy. I'm not sure how he'll answer that, but I suspect one of the topics he might examine is the potential of an oil price shock, which is certainly something that the Fed would be thinking about in their meetings. So your knee-jerk reaction about an oil price shock, and that's where the price of oil goes up to the moon, would be that that's inflationary, and since the Fed fights inflation rates with higher the Fed fights inflation with higher interest rates, that might mean that the Fed would keep rates higher for longer. But in actual fact, I don't think that's how they would react. The Fed is only reacting to inflation, which they think the cause of comes from monetary policy, too much money in the system. And raising rates, of course, tightens monetary policy, takes money out of the system. And the problem with inflation from, potential what's going on in the Middle East or an oil shock in the Middle East, most of the scenarios that cause the price of oil to go up means that transportation of energy from the Persian Gulf through the Gulf of Hormuz is disrupted by fighting. And raising interest rates really won't do anything to unblock the Gulf of Hormuz, so the Fed won't react. And actually, on the contrary, because higher energy prices is sort of like a tax on the consumer, right? People have to spend more money on transportation and other products because energy prices went up. It means they have less money to spend on those things and other things as well. And that, of course, reduces demand. And in fact, that's deflationary in the other ways. So the Fed may act conversely, and I very much doubt Powell will say this, but conversely, you could see an oil shock, if we had one, resulting in the Fed cutting rates rather than keeping rates higher for longer. Having said that, I don't understand why the Fed is so determined to keep rates where they are now. I'm basing the market is basing its opinion on the Fed, not just on their last meeting, their last statement, Powell's last press conference, but also on comments of Fed governors and Fed presidents that have been made since the last meeting. And most of those comments have basically indicated the Fed is taking a wait-and-see attitude about inflation to see what the impact of U.S. tariffs on goods coming in from the rest of the world is likely to do to U.S. inflation. The reason I say I don't get that is simply because, is simply because I think inflation is already under control. If you look at the last three monthly CPI data, whether you're looking at the headline number or the core number, which excludes energy and food prices, they show inflation already below the Fed's target. The last 3 months of monthly data, CPI data from the Fed, actually, if you annualize that, it's almost down to 0%. And for the core data, it's at 1.6%, which is below the Fed's 2% target. So, I don't expect the Fed to suddenly start saying inflation's under control. They've made enough comments saying that they don't think it is. So you're not going to hear them express my opinion at the meeting. But perhaps the fact that these CPI numbers and the PCE numbers as well have been so encouraging, perhaps that will sink a little bit into their statement, a little bit into Powell's comments or answers at the press conference, and you will see greater certainty about that second rate cut this year creep into the market. Now, if the market wasn't being so much influenced right now by events in the Persian Gulf, that would be just a really positive thing for equities. I think equities would take off. If it turns out to be a quiet news day tomorrow and there is no bad news from the Persian Gulf, and the Fed does sound slightly dovish, I think U.S. equities will probably go up tonight. Frankly, there seems to be a lot of people who want to buy U.S. stocks. They are very resilient to the bad news in the Middle East. Since I spoke to you last week, U.S. equity markets, the S&P 500 is only down about 1%, even though we've had all these events, which you would assume are fairly bearish. So the market has held up very well, and if it has some good news and it doesn't have any bad news to counteract it, expect the market to go up tonight. In summary, what I'm saying is I have my analysis of what the Fed should be doing. They don't care about me. There have been plenty of statements that they're going to keep a wait-and-see attitude. They're not really going to change that, but maybe my expectations are they'll moderate it a tiny little bit. And if there's no bad news for the market, that'll be good for U.S. equities tonight. Thanks.